Hey guys, welcome back. In this video, we are talking about the 1.7 billion synthetics just exposed, how shorts are stuck, the $250 price target, and many more in this video. One of the questions we have always asked is how many floats do we own for AMC? Now, 500,000 shareholders will have to own 1,048 shares to own the float. I know many apes who have 10 times that. We need a share count. So this is on average how many will be needed, 1,048 by each investor. And this is with the assumption that we are using 500,000 shareholders. Now for AMC, it's a lot bigger than that. We can talk about between 3 to 5 million shareholders. And so that number then goes down to even lower, but we already seeing how people have owned thousands of shares. We're seeing people who buy thousands of shares every single week, every single month. And so we know that the float has been sold many times over, and perhaps we've seen it right now. So you can see retail was right all along, and it's worse than anyone imagined. So Wall Street told us AMC short interest was just 24% of the float. However, the model has just exposed the truth. What we are looking at here is that the official short interest, which once again is still self-reported, is still not accurate because it doesn't include for offshore shorts and other stuff as well, but that was 224 million. The synthetic short interest is 1.58 billion, 300% of what the float is. The total short position coming in at 1.7 billion shares, 324% of the float. Now, already we have talked about, every time we've talked about the short interest, I've always said it's very likely that you should times 10 that because that is what we should be looking at. And over here is in fact times 10, but actually even more. And so 1.7 billion shares that we are looking at, even from the FTDs, 144.57 million fails to deliver, 137% of official short interest. In order to get 144 million FTDs, you cannot possibly have only 124 million short interest. And this is what we've said with, there has been multiple points where it shows that the data has been faked, that the data, what we should actually be seeing, it's a lot bigger. And this is what we're seeing, 1.7 billion shares. But it doesn't actually stop there, because then you take a look at the swaps, and we've shown these swap positions in the past as well. This is taking a look at the swaps in 2025. When we started 2025 in January, we had 843 million total return swaps. However, when we went to August 2025, we then had an increase to 1.1 billion, which was increased by 313 million AMC total return swaps. So this was during a time where we saw the price of AMC going down, but we also saw shorts claiming that they have covered their positions. No new short positions was increased, but yet we saw an increase of over 313 million total return swaps on top of the 843 million total return swaps that already exist out there of AMC. So here we're looking at 1.1 billion. Here we're looking at a 1.7 billion. And already you can see how high that's going. And there's still a lot more things that needs to be considered. I think that this is a very big step forward in terms of showing how many synthetic shares exist out there already, in terms of why the quote unquote official interest isn't a data that we should actually be relying on. But there are still a lot more factors, because we've talked about tokenizations in the past already. We've seen the quadrillions of AMC tokens that exist out there, and we've seen the offshore positions that have been talked about but not being properly dissected. And so there has been still so much things going on out there, but at the very minimum, we're looking at 1.7 billion synthetic short interest. We're looking at 1.1 billion total return swaps, which by the way, could already be a lot bigger, because we're now, of course, we're looking at August 2025. We're now in March of 2026. So this position could have gotten bigger for all we know, but that is just to talk about the synthetic positions that are out there. And for this, we have to realize is because of this, someone or many are obviously stuck on a very bad bet gone wrong on AMC to keep this going for months at a plus minus penny move and over 80% dark pools every single day. And so we have already known that if what we're already seeing here with the 1.7 billion, with the 1.1 billion, we know that the shorts are stuck, and it would explain why we're constantly seeing the dark pool. why we're seeing this plus minus penny moves on AMC and why it's every single day. It's because they are afraid of what's going on. There should only be 500 million AMC shares that exist out there. Yeah, we're looking at 1.7 billion shares already here. And this is why I've said, even if AMC were to go up $1 or $2, it's damaging to them. And that's why we've said when AMC is supposed to be seeing its real price discovery in terms of being priced in the hundreds, you can imagine how much money then is going to be lost. When we see from AMC now of $1 going to $100, they are suffering from this already. The 1.7 billion shares will face a loss of $100 per share. The same with the total return swaps, and this is why we're seeing the suppression. We're also looking at the borrow rate going up higher. Now, what we have to talk about this as well is what I started the video off with. Firstly, you can see, I can imagine the next reported short interest could be 130 million plus. The reason why people are saying this is because the cost of borrow is going up. When the cost of borrow is going up, it means people are in demand. It means that the shares are being used. However, just like what we've seen here with the short interest and the synthetic short interest, is you have to understand that the things that we're being shown, this 24%, this 124.1, I've always said is the minimum of the minimum. I tend to, as a rule of thumb, like to timestamp that number to see where it's actually at. So the same would apply for the cost to borrow and for the short interest as well. But at the very least, to know that the cost to borrow is not only increasing, but actually staying at that level, it really does highlight that they are actually, in fact, borrowing shares and are constantly using shares. And it just goes to talk about how much pressure is actually being used to suppress against AMC. Now, what we're also looking at as an increase as well is the days to cover going to 4.2. This is just another example of course, the shares that are being borrowed that are increasing. And so it's why I've said here, yes, we're looking at 1.7 billion shares with the total short position, but actually it's in my opinion, a lot higher than that already. I think it's already a good step that we're seeing, these synthetics being exposed, and as we should. But I definitely do believe that the number of these synthetic positions to be even higher. And just like what we've said with the cost to borrow, what we said with the days to cover, these are just examples of course, what's going through. You can even see the big increase, and it's why we ultimately knew that the shorts were worried. So December 15th, what we're seeing is that AMC had 15 million short interest. The latest report is 124 million, which we now know is actually 1.7 billion. But now, so what we're looking at is even higher than the multiple seeing here. And so people who claim that Adam Aaron is bailing out the shorts, but yet we're seeing the short interest going up. And this is a very simple thing. If what AMC is doing is bailing out the shorts, like a very small group of people that are saying this, if that is the case, you wouldn't be seeing short interest going up. You definitely would have been seeing this 1.7 billion shares of AMC being shorted, because if they are getting bailed out, if they are getting all of their positions covered, the short position wouldn't be increasing. They wouldn't have a need to create synthetic positions. And so that's what we have to understand with why when we see the price going down and we see this 1.7 billion, we see this 1.1 billion total return swaps, these are the reasons why. You can see day after day, month after month, year after year. Nobody can actually believe this is true daily supply and demand price action. And I think this is the biggest thing for AMC, is why we're such a powerful company, why we have such a strong community base. It's because people now have obviously realized what's actually going on. 5 years ago, when people weren't used to these tactics, they would have believed that what's happening to AMC is true. But now, because we know what's going on, we know that what's happening to AMC is clearly not the case. And we're fighting back against these hedge funds and market makers. And you have to realize that AMC is also improving fundamentally. We've talked about this with how they're refinancing the 12.75% note into the 10.5% Deutsche Bank note. Now, this is saving AMC's costs. We talked about how this is going to save over $10 million per year, but also extend everything else, prolonging this whole process, and how AMC is going to have more money sped up, in fact, to make wherever it's more investments or to make into infrastructure, into improvements. And so we have many routes that AMC can take. And you have to realize that from today's perspectives, We believe that volatility and our current market prices also reflect market and trading dynamics unrelated to our underlying business or macro or industry fundamentals. They hardly mean overvalued. This is just talking about, of course, what it's actually going on. Now, we've talked about this already. With the industry, people have said that the theater industry is a recession hedge, is a recession proof, and that's why people are viewing for the best opportunities within this industry. Now, within this industry, then when we dig deeper, which one do we think has the most potential? And I'm not saying this just because of being an ape, of being AMC, but the fact that we have been suppressed, the fact that we have not seen price discovery, that alone is already showing how undervalued we are. Not to then mention about the improvements of the fundamentals. When you take a look at the fundamentals in reflection to its price, you compare with all these other companies within the same industry, you will already see how undervalued AMC is. And multiple other institutions also have shared this point. And in fact, we've talked about this with why that's the reason institutions want to buy. And then you can see here, $150 to $250 in my opinion, where we're seeing more buys coming in, where we're seeing the price being held up. Now, ultimately, I've said this, technical analysis when it comes to AMC isn't that relevant. The reason for this is because we're faced with constant manipulation, we're faced with constant suppression, so it doesn't matter. However, what it does allow us to do, what it does help us with, is understanding the sentiment that's within this. It's about understanding that investors are willing to buy, are willing to hold, and more importantly, fight back against these shorts. And that's why this $250 price target is something that I think is extremely doable. Another big thing is potentially the Roaring Kitty has just logged in. So recently with his X profile, it says that this account may be connecting via proxy such as VPN. However, this VPN flag is brand new. It wasn't there before March 16th of 2026. And so it could be that Roaring Kitty has logged in. And every time Roaring Kitty has returned, we have definitely seen volatility because he was here to make an impact. Now, there could be some reasons for why this is happening. Firstly, the GameStop acquisition. This is something that could be getting closer now and we're seeing something happening. And what we've said with the GameStop acquisition is that it's supposed to be something that will really break the industry. And we know Roaring Kitty's investment in GME, so they obviously, and he obviously wants a good acquisition. On top of that as well is when you take a look at the data, so we saw with AMC, we're now looking for GME as well, 404% synthetic short interest, 1.65 billion with a total of 1.7 billion as well for GME, just like what we saw with AMC as well. So this is how ridiculous this is. And it's why we've constantly said with the suppression and manipulation that's obviously going on within this market. But it also could be why that as we're seeing this being exposed, we're now seeing Roaring Kitty also returning to this. And on top of all of this, we're seeing hedge funds dumping financial stocks at a record pace, where they're talking about banks, insurers, fintechs, and of course others as well. And I find this very interesting because they are bearish on banks who, what we've said with, as they lent out money to these hedge funds who are losing money on their short bets, who are not going to get the returns, it could be the reason why. We're also seeing how UBS faced technology outage that impacted trading business, when we know that they obviously are affiliated with other positions as well, such as the AMC and GME toxic swaps. On top of this, this is the updated list for derivative positions. Previously, JP Morgan was actually number one. Now we're seeing Goldman Banks as number one, Goldman Sachs, with $54 trillion. So there's been a decrease in JP Morgan Chase, but it's still extremely high. And now it doesn't surprise me that JP Morgan has actually cut their positions down, especially with how worried they've been of the bearish market and how much exposure they had previously. Another thing is using ETFs, and this is what we talked about for AMC and GME as well for a lot. Don't want to go too deep into this, but you can see how ETFs are being used to manipulate shorted stocks. We're also looking at the quick cash out, another sign of bearishness, another sign of panicking. And then finally, private credit default rate just hit 9.2%. A lot of bearish things happening in the market right now, a lot of signs that a recession is going to happen. And this is what we've talked about for a very long time. As always, none of this is ever financial advice, and I'll catch you guys next time.